Has this ever happened to you? You sold a cash secure put option, then the stock tanked. You own 100 shares of a stock that you really didn't want to own, and you ask yourself, what now? Do you sell it? Do you hold it? Do you try and fix it? Or do you just exit the position altogether for a loss? In this video, I'm going to talk you through step by step how I handle the situation when I've been assigned a put option and I don't really want to own the stock. By the end of this video, you'll know how to protect not only your mental health, but also protect your capital and quite possibly turn this assigned cash secure put option into a win. First and briefly, why do assignments happen? When you sold someone a put option, you're selling them insurance against the stock. So they assign that put or assign that insurance when it's advantageous for them to do that. To simply avoid assignment, you just make sure it's not advantageous for them to assign that put. So basically, you make sure there's enough extrinsic value in the option you sold so it's not worth them assigning it. When the possibility of assignment goes way up is when there's not much or any extrinsic value in the put option you sold. And here you see a put option in ARE that was assigned to me the other day. Now these put options weren't ones that I wanted to be assigned to me. I would have preferred to continue trading as a cash secure put option, but in reviewing this position, I felt comfortable with this assignment, and that's why I allowed this to happen. But first, the reason why it was assigned because there really wasn't any extrinsic value left in the put option that we sold. That July 18th $100 put option was made up totally of intrinsic value because it was so far in the money. But let's act like this was you and you didn't want these assigned to you. How would you deal with this situation? What are your options when you don't want to own the stock but it's been assigned to you? Well, let's talk through a game plan here. My goal is to not only show you what to do if you get a surprise assignment, but how to avoid that surprise assignment altogether. Now, first, to avoid that surprise assignment, you just want to make sure that there's enough extrinsic value in the option you sold. If there's not, just understand that early assignment is quite possible. That's especially the case as the expiration date nears. In this case, because it was so far in the money, notice this July 18th one put option was assigned about 17 days early. Now, the only reason why that typically happens is if the put option is really far in the money, which in this case, this put option was. Now I'm going to talk you through the 4 options you can consider whenever you have a surprise cash secure put option assignment. And I'm going to show you real trade examples of how I use each one of these 4 options. The first real trade I'm going to share with you is a trade I was doing in WEC. It's a utility company. I've been selling some cash secure put options against WEC. I've been selling the cash secure put options at this white line here, the $85 strike price. Well, unfortunately for me in this position, the stock actually experienced a pretty sharp decline. Fast forward to June 14th and was trading for around $77 per share. These $85 cash secure put options were assigned to me. So now I'm at that spot. I've been assigned shares. What do I do with it? Well, number one, I don't freak out. I remain calm. As a trader, we want to think logically through this decision. You see, we want it to be a business decision, not an emotional decision. I've made some notes for you here so you kind of think through what I was thinking at this moment. Now, first of all, I believe that WEC was undervalued. Its fair value was around $105 per share. With me being forced to buy the stock at $85 per share, I felt very comfortable with that because I felt like I owned a company, a great company, at a 25% discount. So from a fundamental standpoint, I was comfortable owning these shares. And even from a technical standpoint, it didn't look terrible. I mean, the stock had come down and was finding support at the previous support it had found back here in April. So even from a technical standpoint, I felt pretty good about this position. Based on the fundamentals and also the technicals, I felt comfortable owning these shares. So I decided to keep the shares and turn it into a covered call. In just a minute, I'll show you the entire spreadsheet of all the cash I collected in this position, but here's how the trade turned out. Fast forward to January 18th of this year, and the $85 strike price covered calls I've been selling were assigned, so I sold the stock at $85 per share. Here you see a spreadsheet with all the trades I've done in WEC over the past couple of years. And this green row here, that's where I was assigned those shares. So just notice that I bought the shares for $85 per share and ended up selling them for $85 per share. And I collected some nice cover call premium along the way, as well as a dividend of 84 cents per share as you see here. So in all, as a result of trading options in WEC, including when I was assigned those put options, I pocketed a net of about $8.06 per share for the 300 shares that I owned in this cover call. So that's how I handle a situation where I don't mind owning the shares. This is a nice example of how you might handle the situation where you're kind of caught by surprise that the put options were assigned, but when thinking through it, you realize that fundamentally you're in good shape. And as a result, you decide to turn it into a cover call. Just keep in mind that if I had closed this out up here when I was assigned that cash secure put option, I would have a loss. And I would have done that in a company that I think is undervalued. So to me, it just didn't make sense. I wanted to keep working it from some angle. In this situation, I decided to do that from a cover call angle. Now let's move on to example number 2. What do you do when you definitely don't want an option assigned to you? Here you see an example of that. I've sold a cash secure put option in UNH a while back. Unfortunately, the stock took a nosedive and the put options I've sold are now deep in the money. And I definitely don't want to own these shares of UNH. I just want to keep trading it as a cash secure put option. This is what my UNH position looked like on the day I rolled this put option. So this yellow arrow, that's the day I rolled the option. And we had sold the 450 strike price put option. So at this point, this put option was pretty deep in the money by about 15%. And I realized if I didn't do something about it, it'd probably get assigned early. And I didn't want that to happen. But at the same time, I didn't mind staying in the position. Yes, it had experienced a sharp decline in stock price, but I was still okay with the company. So here's the trade I did. On May the 1st, I bought to close the UNH June 20th 450 cash secure put option. And when a position has gone against me, I always want to try and improve my position when I roll it out. So that's what I did. I sold to open the UNH March 20th, so the option expired in about 9 months into the future, but I got my strike price down from 450 to 410 and still collected a little net credit and pushed it way out in time. That gave the position a lot more extrinsic value and greatly decreased or almost just eliminated the possibility of me being assigned early at this point. So that's how I avoided early assignment on UNH. Now what happens when shares are actually assigned and you realize you don't want to own those shares? The shares were assigned early. What do you do then? Here you see another very real trade I was in that I did just a few months ago in Campbell Soup's CPB. I didn't mind owning some shares of it, but I didn't want to own all the shares that had been assigned to me as a result of the cash secure put options I've been selling. So what did I do? Well, a very simple trade. As you see, I told my patrons in this trade alert, I didn't mind owning some shares of CPB, but I didn't want to own all 1,100 shares that were assigned to me. So I sold 400 of the 1,100 shares that were assigned to me. Did I just take the loss? Nope. Here's what I did. First, I turned the 700 shares into a covered call by selling call options against them. But how did I address the other shares that had been assigned to me that I didn't want to own them? I wanted to keep that as a cash secure put option. Well, here you see how the trade unfolded. So we bought 1,100 shares at $40 per share because of the cash secure put options we sold. And for those 400 additional shares I didn't want to own, I turned those back into a cash secure put option. And here's how I did that. As you see here, I sold the November 21st $38 put options. So I got my strike price down from $40 to $38 and I still walked away with a small credit. Here you see the explanation I gave to my patrons in this live trade alert. I sold to open those November 21st $38 put options and got $3.99 per share. That more than offset the loss we took for those 400 shares that we had been assigned, and then we sold them off after the market opened the next morning. So in essence, we rolled that $40 put option that had been assigned to us down to $38 per share. As you see here at the very end, we ended up walking with a nice net credit on just those put options of 15 cents per share. And that's based on the loss we took on the $40 put options that had been assigned to us versus the net premium we collected on the new put options at that lower $38 strike price. So this is how I like to handle a situation where I've been assigned some shares, but I definitely don't want to own the stock. Just sell the stock that was assigned and sell a new cash secure put option at a better strike price farther out in time. And if you do it right, you can still walk away with a net credit. Now the third scenario is one that hasn't happened to me in quite a while, but it is possible. And as you sold a put option and it surprised you by being assigned to you. But here's the thing, if you sold a put option in a company that you really like at a strike price you feel very comfortable owning the company at, well, you probably should be excited if you're able to buy the stock at that price. Here's an example of that. I've been selling some Pepsi 125 strike price cash secure put options. Now so far, I haven't been assigned these put options, but if I am assigned Pepsi at 125 per share, I actually be really happy with that. It's a nice dividend paying stock, it consistently grows its earnings, and its price is lower than it has been in a long time. So in this situation, if I was assigned these shares, although I'm not trying to be assigned, if I wanted to keep them, I might try and figure out a way to keep those shares by putting a little extra cash in my account to help cover these shares. So just keep in the back of your mind that if you have the ability to, if you're able to buy a great company at a really discounted price, maybe consider adding some cash to the account so you can own these shares at a great discount. Now here's a fourth situation you might find yourself in, and I found myself in this a little while back. It's a situation where the company has changed. Fundamentally, you no longer like it anymore. That happened to me with Intel, ticker symbol INTC. I've been assigned some put options in Intel, which previously I did like the company. I no longer liked it. Fundamentally, I thought it was broken, and I didn't see how it'd be fixed anytime soon. So what do you do in that situation? Well, the answer to me is very simple, but it's very difficult to do for some traders. You simply close the position. You take a loss. The company is broken. It may be impossible for you to fix that position. And that's how I felt about Intel. I felt like the company was broken. And I thought maybe it'd get fixed down the road, but who knows how long it would take, and who knows if it would even get fixed. So in this situation, I decided to close this position, and yes, I took a loss. You're not gonna win them all. If the right decision is to exit a position, just exit it and move on. So I dumped the shares, took my loss, and cut my losses because it could have definitely gotten a lot worse. In just a minute, I'm going to show you the best way to prepare for this type of situation. But real quick, here's a summary of the process I go through when I'm assigned shares I didn't plan on owning. I simply ask myself one question: would I buy this stock at today's price? If the answer is yes, then I keep the position and I manage it. And we do that very successfully. Positions that go against us and are assigned to us, we end up collecting a ton of cash in those positions, and many of them turn out to be great winners, as you saw with WEC. And if the answer is no, I don't want to own these shares at that price, then we do something about it. Now, simply, if we no longer feel comfortable with it, we just exit for a loss, which happens every once in a while. Not very often. Like you saw with Intel, it does happen. Typically, in order for me to be happy with owning shares of a company, I want it to be trading at a pretty big discount. So typically when a put option goes against me, and I realize that shares might be assigned to me, or they catch me off guard and are assigned to me early, I try and improve the position, improve my entry point by rolling my put option strike price down as I roll it out, like you saw with UNH. Before I show you how to prepare for assignment ahead of time, let me just show you a couple more positions to help you realize what you can do when positions are assigned to you if they're still good, stable companies. So you see a position we were in Tyson. It's Tyson Foods, ticker symbol TSN. We were in this position for quite a while. But notice at the end, when it was all said and done, we walked away with a profit of almost $25 per share. And remember, this is one that went against us. We have put options assigned. Now let me share with you one more position that went against me in a pretty big way before I show you how to prepare before you're assigned to avoid that regret and that pain and that stress that comes with unexpected assignment. So here you see one more that was assigned to us, and it's Texas Instrument, ticker symbol TXN. Again, another one we've been trading in for quite a while. But notice at the end of this trade, although the position went against us in a pretty big way, in the end, we still walked away with a nice credit of over $5,000 and over $17 per share. Just know that if you're doing this long enough, positions will go against you. But they're still really good companies. I'm okay continuing to work them. And as you see, they can turn into very profitable positions. So how do you prepare ahead of time? Now you're watching this video because you don't want to be assigned. So how do you prepare for that? Well, you simply want to have a plan. The best way to win this assignment game is to prepare before you even sell your put option. Know what you're going to do if the put option goes against you. I always, 100% of the time, have a plan in place for if a put option is assigned to me. A couple things that have really helped me out is to only sell put options in stocks that I'd be very happy to own. No, I may not get the most premium because they're not the most volatile stocks, but if I have to deal with these stocks at those prices, I'm actually pretty happy because I feel like I'm getting a great discount on a great company that I've researched ahead of time. So don't sell put options to just any company just because it pays a big high premium. Sell put options to companies that you really like at prices you'd be very happy to buy them at. Then have a clear plan of what you're going to do. I laid out 4 scenarios in this video for you to help you think through what you're going to do next time you sell a cash secure put option. So have a plan in place and know what you're going to do if that put option goes against you, because some of them will. And then to help avoid getting caught off guard by that early assignment, have alerts set on your positions so you're not caught off guard by early assignment. Let's say, for example, I've sold a Pepsi 125 cash secure put option. Well, I want to know when there's very little extrinsic value left in that put option. So I'll set an alert at, say, around 20 cents per share on the put and the call side. That way, if the put goes deep in the money and never reaches that 20 cent per share alert price, when the call option has only 20 cents per share of extrinsic value in it, I'll get an alert and it'll trigger me to check that put option. So set alerts to help you out so you're not having to always watch your positions 24/7. And finally, just kind of keep this in the back of your mind. I know if you're selling put options, you may not want them to be assigned to you, but just keep in the back of your mind that you shouldn't be selling put options at strike prices that you wouldn't be happy owning the shares at. Not saying you have to own the shares, but if you look at it that way, it'll protect you from selling put options in companies at prices that you really shouldn't be doing it at. Now, I know most of you sell put options without the desire to buy the stock at that price. Just keep in mind that's what you're doing. You're offering someone the right to sell you a stock at a set price. So make sure whatever strike price you're selling that put option at, it's one you feel comfortable dealing with the stock at. And an even safer way is, as you see highlighted here, if you wouldn't buy a stock at that price, maybe consider not selling puts in it. But if you do decide to sell puts in it, make sure you have a plan like I laid out in this video. Assignment doesn't have to be a disaster. If you have a good game plan, it's just the next phase of your trade. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. Here you see a viewer on YouTube ask me, how do I repair a position that's gone against me? If you'd like to see 5 of my favorite tricks that I use to repair cash secure put positions that go against me, check out the video at the link above and the description below entitled Professional Trader Explains the Secret to Repairing a Cash Secure Put Option. Until next time, happy investing, and we'll see you again soon.